Before we start, I am going to just say one thing. So people have been surprised this week because my surname throws people off. They're surprised to hear that I'm actually Lebanese. My husband is Argentinian, hence the Bercetche. But I am Lebanese, and I feel, if I may, just a couple of words about the New Voices program. It means a lot to me as a journalist, but also as a Lebanese woman, because I do feel that throughout the course of my year at Bloomberg, I've had the opportunity to speak to so many impressive women, brilliant women who are doing amazing things.
Absolutely.
And if we can give a platform to those women to raise their voices and to get out to the public, to the world, outside the Middle East region, little stories and nuggets of what these women are doing in the region, then this program is a success, and I would see my job also as being a success. So it means a lot to me as a journalist and as a Lebanese woman. So
well said.
That's my bit. Okay, We're gonna have a newsmaker interview now. So I've had a lot of discussions the last couple of days with plenty of people in the forum about the outlook, the macro outlook. And I think if we had had this conversation maybe a month ago, the tone would have been a little bit different because people are a lot more pessimistic. Ever since then, there have been more constructive talks between the US and China, with other countries around the globe about potentially lowering tariffs, about securing trade deals. And that seems to have been the catalyst for markets to start moving higher again. So maybe let me just start off by asking you, do you think the worst of the uncertainty is behind us now, Carmen?
What I feel is that, from a geopolitical lens, we're in a much, much better place because you see a lot of de-escalation, right, that's happening, be it what we saw between India and Pakistan, a lot of talks of that are ongoing on the Ukraine-Russia crisis. The China-US trade is something that was what was really creating most of the volatility. So I think we're moving into a new era, right? A new era for US trade and for globalization. I think globalization, what's understood was before through cooperation. Today, it's really about strategic self-interest. And it's about really making sure that all countries are looking inwards and sideways for trade partners. But I also think that the structural shift will have to play out, and I think it will take some time. Because the data, the soft data that we have today, be it hard or soft, is unclear. We see today that companies and CEOs are really looking at their balance sheet, making sure that they're strengthening balance sheets. They're looking at, their growth interests, making sure their CapEx and their hiring strategies are delayed a little bit because we're really not clear in terms of the uncertainty from the economic stability that will come out of these tariffs.
Yeah.
Now, for the Middle East, it's easier because it's only 10% tariff, right? Oil exports are exempt, and we're not an industrial sort of region, so that makes it a lot easier. And it also creates opportunities, right? It creates opportunities for us to look at some of our trading partners in Asia. So I think from a tariff standpoint, we're in a relatively good position. However, and I think the Middle East is really very well placed because it's playing the long-term game, right?
Is it? Oil prices have been dropping.
And they are, but today we saw could be an uplift also in future demand, right? And I think from a macro perspective, I think the Middle East is in a very good place, and I should say the GCC. If you look at the Saudi numbers, right, debt to GDP is still below the 30% mark. You look at inflation below 2%. You look at unemployment achieved, right? The Vision 2030 and Realization Program of 7% thereabout.
Yeah.
We talked about women. So if we look at the women participation in the workforce is still, it's actually higher than the 30% mark. Private sector contribution has gone up phenomenally. And I think non-oil GDP is also improving quite dramatically.
Yeah.
So the focus really for the GCC is about foreign direct investments. It's about improving regulation. It's about widening and deepening the capital markets environment that we live in. And so I think we are in a position to benefit from that going
There's
forward.
certainly been a lot of interest and wealth flowing in to the GCC.
Right.
We're going to hear from Zainab shortly, but she comes on our show and we talk a lot about Dubai real estate prices. And one of the segments we did a couple of weeks ago was whether lower oil prices might have an impact on financial assets. So I'm just wondering, from your standpoint, do you still see a positive momentum to the GCC region, despite some of the uncertainty in the world, the trade uncertainty, and of course, the backdrop of lower oil prices?
I mean, there's no doubt, right? Oil price, I think Citi, we have a target around $60, and I think, the break even is obviously higher. But overall, I think the GCC has been focused for the last 7 to 8 years on diversifying its economy from being an oil-based economy and to becoming the stabilizer for the Middle East nations, right? And I think they're really achieving those two objectives and those two milestones and the right steps. So if we look at non-oil GDP, right, that has improved quite considerably. And I think, be it in financial sector, be it in real estate, be it in tourism, be it in logistics, be it in infrastructure, all of those things and all the national champions that have been set up under some of the sovereign wealth funds are really to make sure that we have the capability to be able to, improve non-oil GDP. So I think, yes, there will be an effect if oil prices obviously plummet and drop considerably. But that's really, I think we'll have to wait and see. Yeah. But I think all the efforts, all the structural changes that are happening are flowing into the right direction.
I was speaking to a market participant earlier today, very, very briefly, but he said to me that the market attention has now almost shifted away from tariffs towards the U.S. deficit situation. You've got yields rising higher.
Absolutely.
You've got 30-year yields approaching 5%. What are your clients saying about investing in U.S. fixed income? Is it still perceived to be a safe haven?
Look, I mean, for safe havens, you've got the dollar, you've got principal protected notes, you've got deposit rates, and I think fixed income. I think if you look at 3 to 5 year durations will yield maturities of about 5.5% to 6%. I think that's a great trade, right? I think clients are also looking, now that volatility, the VIX has dropped by more than 50% from the peak, right? There's an opportunity for us to start hedging portfolios because most clients are overweight in U.S. assets, right? And while we play the long game and we're looking at sort of the performance for the rest of the year, there's a lot of uncertainty, right? So hedging strategies, I think, make a lot more sense in an environment where volatility is low. I think what's also interesting is private credit. As interest rates fall, and we're anticipating 50 to 75% cut in interest rates.
Basis points.
Sorry, what did I say?
Percent.
Oh, I'm sorry, basis points cut. So if we factor in a 75 basis point cut, I think then private credit becomes quite interesting. Diversification across the equity spectrum, and that's already been happening, but into Europe, into Asia, into Japan, into the more, where valuations still make sense and where there's a considerable discount to the U.S. market, or was. I think makes a lot of sense.
Have you seen clients move money out of U.S. equity markets into European equity markets because of the fiscal spending hopes in Germany?
Yeah, I mean, we saw rotation and we saw quite a bit asset allocation rebalancing across the equity spectrum. But I would say that most investors, as I said, are long U.S. equities because of the sectors, right? Because of technology, because of fintech, and because of the digital space and renewables and so on and so forth. So you see a lot of clients are sort of following certain sector dynamics as well. The MEG 7, the semiconductor industry, those are still being led by the
Sounds like U.S. exceptionalism is still alive then for your clients.
Yeah, it is, absolutely.
Gold was a lot of focus. I mean, we talked about gold a lot in the run-up to tariff, quote unquote, Liberation Day. It had a very solid performance this quarter. And I just wonder what private clients are doing, because a lot of the reporting suggests that you had a lot of central bank buying come through, ETF buying, and I wonder whether also you've seen private client interest in
Absolutely.
buying gold.
I think private banking clients have been looking at gold to begin with to hedge portfolios, but more recently to take a defensive stand, and also because they see a lot of upside given how the equity markets rallied. So I would agree with that, and we're seeing the safe havens, but at the same time, People are still long gold because of the outlook as well for the rest of the year and some of the uncertainties associated.
Yeah.
So the world, is becoming multilateral, right? It could be a win-win. It doesn't have to be a zero-sum game, but at the end of the day, I think looking at proper diversification across asset classes and across geographies makes a lot of sense.
Yeah. We also spend a lot of time on our show. I'm going to plug the show, Bloomberg Horizons, our daily show, talking about the growth of capital markets in the Middle East region. Plenty of IPOs, and it's really been busy the last couple of years. How are your clients looking to take advantage of that?
Well, look, we've had a fantastic run this year where DCM is concerned. The debt capital markets has been very buoyant, and I think that's going to increase. Clients are also looking for uses and sources of alternative financing as well, ECA financing, a hybrid credit, private credit, securitization platforms that we're working around guidelines within the GCC sovereigns as well, and to see how that plans out. So I think a new issuance in new sectors, right? So it's not just only the national champions that we knew them as they were, but also there's a lot of issuances that are coming out of some of the portfolio companies that we see under the PIF, for example, that are looking to bring in fresh capital. And I think so that's a really good dynamic. On the ECM, as you know, Joumanna, we've had a slow start this year, right? Because, of course, Ramadan came in the first quarter, and then obviously if you weren't ready with your prospectus and all the filing that you needed to do, you would have had to wait a little bit longer. And then, of course, the tariff situation. But I think now that volatility has come down a little bit more, for good companies, you see a lot of filing going through the capital markets sort of streamlined. So I think at the end of the day, you'll see a lot more activity. Currently, Citi is active on a few situations. Yeah. And I think, there's a lot more to come going forward. Yeah. Absolutely.
I talk a lot.
In the secondary market, though, there's a lot more also we can do, right? So
that's always been an issue, the lack of liquidity in the secondary market. Is it getting better?
So it's improving slightly, and I think some of the guidelines needs to also, with regulators and need to be thought through. But accelerated offerings, for example, rights issuance, convertible bonds, sukuks, which we already do, but obviously a lot more on the equity side, I think is something that we can develop further, and I think there's a huge opportunity for us to do more business there.
I'm sure everyone in this room has heard the word diversification a lot. And if you've been in the region the last few years, all of the Gulf countries have their own diversification plans. How is that tangibly showing up in terms of growth opportunities that you're looking at or your clients are looking to explore?
Well, through the illiquid space as well. I mean, you speak to most of, a lot of the family offices, for example, about 40 to 50% of their asset allocation today is in illiquids. It's in private equities, it's in hedge funds. And hedge funds play a couple of roles, not because of their diversified strategies, but also because sometimes they're a hedge to the market, right? And then in real estate. So the real estate space has always been very active, especially I think if you look at Europe and the GCC. Now, the results obviously in returns have not, have been mixed in real estate, but I think for private equity, we're seeing US companies staying private for longer, right? To maximize private equity investor value. We're seeing also, if you look at the U.S. companies, most companies that generate 100 million of revenue a year or more are still privately held, right? A lot of that we see. So additionally, I think in family office space, for example, a lot of companies are very tech savvy. A lot of names and families are already tech savvy. So they're sophisticated, they're early to the market, they understand technology and digital innovation because they're already using that in their daily lives. And therefore they're becoming more sector specific in terms of how they want to invest, but they can go into early stage private equity, sustainability, and agricultural climate change kind of initiatives and investments around that has become very, very important matrix for family offices and how they invest.
How are private clients playing the artificial intelligence theme?
in various ways by participating, as I said, very early through private equity initiatives, through joint ventures, partnering with global companies as well who bring a lot of the opportunities early on. And as I said, applying them to their daily lives as well by using the tools and obviously trying to create an ecosystem and a governance structure and investment policy that really adheres to innovation, to tech, to AI. We've heard a lot about that in the last few days.
And more to come tomorrow.
And more to come tomorrow, exactly, as well.
I got a panel on data centers tomorrow.
Yeah.
Wealth management, we've talked about investment, but I'm just curious to hear your perspective on how you see wealth management growing in the region.
Yeah,
and why you think it's going to continue to grow.
Well, because wealth creation, I think, we were making the comment earlier in terms of, the wealth generators, right? The first generation of wealth that's been created is now really shifting into the second and third sort of generational transfer, money transfer. And I think that creates a huge opportunity for asset management, for opportunities for private banks to explore the complexity of their product base, to make sure they're really adhering to market trends. Given that, private clients are very agile, they're very quick to decision making, they're able to really understand and maximize the value around their returns and what they're looking for from a risk and return profile. And therefore, I think it's a huge opportunity. And the wealth creation that's happening in the GCC, for example, in the wider Middle East, really speaks to the ability to make sure that, we capture that and we grow our business. And making sure that we have the right talent and the right resourcing and the right opportunity for us to grow that business.
I was going to say, it must be becoming quite a competitive business because loads of banks are eyeing the opportunity.
Yeah.
How do you stand out? How do you compete?
Well, first of all, on having the tailored solution, having the right conversation, making sure that we're providing the service and Citi's global competency, right, across the client base. For large, sophisticated clients, we provide, best-in-class solutions, but also at the same time try to make sure that we participate and include, our markets business, our corporate investment business to support their needs, be it to monetize, be it to list, be it to create more liquidity and to support their financing needs. So that's really how we work with them across the various channels. And that really, I think, building trust and building relationships over a long period of time, I think makes the difference in the end.
I'm going to round up asking you, can you give financial investing advice to the people who are watching? What's one bit of advice that you would give?
Well, I think at the end of the day, I think stay close to your portfolio, stay close to the volatility, and take opportunity where you see market corrections happening. I'm a value investor, so I always look at valuation matrix, and I make sure that there's a dividend element that supports my income generation needs, and at the same time I'm looking at long-term trends. Be globally diversified. And hope for the best.
Spoken like a true professional. Carmen, thank you so much. Carmen Haddad, thank you.